Global stocks are slumping again after Donald Trump restricted Nvidia chip exports to China. Safe haven buying blasts gold through $3,300 an ounce to a fresh record high. ANZ Research cuts its growth forecasts for the United States and China and has cut its cash rate view for New Zealand. That's coming up in our 5 Things in 5 Minutes on Thursday, April the 17th. And then in our bonus deep dive interview, ANZ Economist Vicky Xiao explains ANZ Research's downgrade to China growth forecasts because of tariff uncertainty.
We parallel this scenario to the negative shocks China experienced previously in 2008 and then the COVID shock in 2020. And we project a much slower growth profile for the rest of 2025.
But first, in 5 and 5 with ANZ, the Nasdaq is down 3.5%, the S&P 500 down 2.5%, and the US 10-year yield is down 4 basis points to 4.27% by 4 a.m. Sydney Melbourne time. That's after Donald Trump restricted Nvidia's exports of high-end chips to China, and the World Trade Organization forecasts an 80% fall in trade between the United States and China. Trump also threatened tariffs of 245% on some imports from China, including electric cars. Gold jumped by more than $100 an ounce to a fresh record high of $3,349 an ounce overnight. The recent volatility has now led ANZ Research to cut its US growth forecast for 2025 by 0.5 percentage point to just 1.5%. ANZ senior economist Tom Kenny says firstly, higher prices will lower real disposable income, and secondly, tariff uncertainty will hit consumer and business spending plans.
Finally, a negative wealth effect by the loss in the worth of a number of financial assets, most notably the sharp decline in the value of equities that we've seen. So our expectation is that both private consumption and business investment will slow considerably.
As of 4 a.m. Sydney Melbourne time, the Aussie dollar was up 0.5% to 63.64 US cents, and the Kiwi was up 0.4% to 59.17 US cents, offsetting another fall on the US dollar. Number 2. ANZ Research has also reduced its growth forecasts for China's economy over the next 2 years. More on that in the deep dive. That comes even as growth in the first 3 months of the year outpaced expectations at 5.4% annually. ANZ economist Vicky Xiao says the strength is a reason why stimulus has not yet been seen in China.
The one stood out is the retail sales, which is extremely strong in Q1, reaching a 12-month high. And the fixed asset investment, excluding property, is also recovering well. Overall, the Q1 data looks quite encouraging, and this is also the reason why there's no stimulus coming out after the tariff shock.
Number 3. ANZ Research has also downgraded its forecast for New Zealand's growth prospects and lowered its official cash rate view because of a struggling local recovery and rising global uncertainty. ANZ New Zealand chief economist Sharon Zollner is expecting the OCR to be cut from 3.5% now to 2.5% by the end of the year and staying there for a year. The previous forecast was for a low of 3%.
House prices are going nowhere fast, so we've revised them down a little bit. We've had a relatively weak quarterly survey of business opinion. The performance of services index was nothing flash. Retail sales, the electronic card transactions were lower than expected. So particularly now there's the headwind of all the global uncertainty.
Number 4. The downgrade comes ahead of New Zealand first quarter inflation data out later today, which ANZ Research is forecasting at 0.9% for the quarter and 2.5% for the year. Sharon says inflation forecasts are also being revised.
It's pretty clear that inflation is going to be lower as well. We've got a much lower oil price now, and of course our lower activity forecasts mean less inflation pressure. But we'll wait to get the updated starting point because we've got CPI data out this week, and so we'll update those forecasts after that.
Number 5. Also out today is Australian labour market data for March. ANZ economist Aaron Luke expects employment growth of 35,000 and a steady unemployment rate at 4.1%.
In recent years, there are more people rejoining or starting work in February and March. After the holiday season, we think that this is a new trend that happened after COVID where people have started taking longer holidays. But for February last month, we didn't actually see that happen. In fact, employment actually fell by 53,000, and the ABS partly attributed this to the fact that there were more people retiring in the 3 months to February. But if we look past the decline in employment and look to the steady unemployment rate, we still think that the labour market is still relatively tight.
Aaron Luke there. Now, in our bonus deep dive interview, ANZ economist Vicky Xiao walks my colleague Alex Tarrant through ANZ's forecast downgrade for China's economic growth rate over the next 2 years as the global economy responds to Donald Trump's tariffs.
So we've just downgrade our GDP forecast for 2025 from 4.8 to 4.2. And then for 2026, we've downgraded to 4.3% despite the strong Q1 GDP print. We parallel this scenario to the negative shocks China experienced previously in 2008 and then the COVID shock in 2020. And we project a much slower growth profile for the rest of 2025. So Q2, we are likely to see China GDP drop to 4.5%. And then the second half of the year, we are likely to see China's GDP drop further to 3.5%. Growth in 2026 will remain weak. It could be more stable with more certainty with Trump's tariff plan. But this scenario probably much similar to the aftershock in 2008.
So just tell us, is this due to the actual effect of the tariffs or more due to that sort of rising uncertainty that we're seeing?
So our view is the tariff shock is caused by the more uncertainty rather than the tariff itself, because what we've seen on the ground that a lot of the exporters, they are not make any transactions, not only because of the high tariff, but also due to the uncertain policy by Trump administration. So I guess the impact of the tariff is more affected the business sentiment rather than the real activity.
You say in your note that the property market is currently the elephant in the room. Why is that? We've just had this strong quarter of growth, but you're saying that looking out, property market presents the risks either side.
So China consumption will have a real rebound only if the property market has a pickup. What we've seen in Q1, there are some good recoveries in the first tier cities, but in other cities, the weakness still remains. So this recovery is a regional recovery, not a nationwide recovery. And also the aggregated data on the new home sales price, it dropped by 5% year on year. So which indicates that the property market is still adjusting. We are not seeing the bottom yet. So that's why we have to pay attention to the recovery speed of the property market for the rest of the year.
And then again, we've had this sort of strong quarter of growth leading up to the end of Q1. But tell us about the underlying state of the Chinese economy. We have had all those deflationary pressures over the past year. What is the actual starting point of the Chinese economy as we move into this new tariff world?
So the PPI number in March recorded a negative 2.5%, which is the lowest this year. And also the overcapacity issue combined with the tariff pressure will push the PPI further down to the negative territory. Apart from deflation, unemployment rate is also the key indicators we are watching out, especially for the youth unemployment rate. We are expecting this number will jump higher in June with more fresh graduates entering the job market, and also the potential job loss we potentially will see in the manufacturing sector.
There is going to be a Politburo meeting in April. What are you expecting to see out of that?
We are not expecting too much news from the April Politburo, and there are no indications there will be a strong fiscal stimulus, but we are penciled in a 50 basis point rate cut for the rest of the year. And also we are not ruling out that there will be an imminent triple R cut in the coming months if the trade conflict with US escalating from here.
Vicky, Xiao there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Thursday, April the 17th. We'll next be on air on Tuesday, April the 22nd, following the Easter break. Stay safe out there. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.